Frequency Podcast Network. Stories that matter, podcasts that resonate.
What is going on in this economy? Well, it was actually growing at the start of the year. The GDP data in from Stats Canada showing that January had a pretty good economic expansion, growing, in fact, at its best annual pace in nearly 2 years. But then for February, not so much. Trump tariff reality check. January's economic output showed an expansion of 0.4% from December, or up 2.2% over the year, with a surge in exports in the energy sector as the key catalyst, with companies basically front-running their supplies ahead of the U.S. president's tariff threats. But even though those tariffs didn't actually materialize in February, uncertainty from consumers and businesses had the economy back to an indication of no growth for the month, and likely negative for March. The ongoing trade conflict has weakened consumer confidence, lowered stock markets, and increased inflation risks. That's a trio of worrying signals. The American president's moves this week to say there will be tariffs on the global auto sector, and even more likely to be announced April 2nd. Now, aside from the economic downturn, inflation is also starting to heat up too, and that raises the risk of a stagflation scenario. My name is Mike Eppel, and joining me to talk about the economic here and now and what to look for in the coming weeks is Richard Forbes, principal economist at the Conference Board of Canada. Richard Forbes, thank you very much for joining us.
My pleasure.
Statistics in from Ottawa for the month of January, Richard, weren't too bad on economic growth, but then it kind of cooled right back down in February. Yes, the weather was bad, but at the same time, that was supposed to be when the tariffs were originally threatened to take effect. Of course, they didn't for another month. Well, what can we take away from the start of the year? Is there any true guidance considering how volatile it has been, how the changing narrative has consistently been inconsistent, really, since the start of the year?
Yeah, well, the Canadian economy, it started off the year pretty well, actually. And that's building on some of the momentum that the Canadian economy had to end off 2024 as well. So, if it weren't for the trade uncertainty and all that, the Canadian economy would be in a good position. However, it is important to note that the reading that came out from Statistics Canada today, a lot of the growth in January was actually due to exports going to the U.S. And we see a lot of that because a lot of U.S. companies were just stockpiling goods ahead of potential tariffs. So that really drove some of the growth, but it was still a positive result this morning.
The irony that the U.S. president has complained about a trade imbalance, and yet he literally caused a trade imbalance to start the year.
Yeah, that's the irony for sure.
At the same time, the fact that businesses were so preemptive, anticipatory in their moves, I mean, that in and of itself indicates that they thought this was going to happen, and were really protecting themselves against the risk of tariffs, which, by the looks of things, again, well, they're in place in certain components, but might certainly be ramped up again next week. And I guess it's just this idea, this notion that the uncertainty is the early takeaway from the 2025 economy.
Yeah, absolutely. So the uncertainty through tariffs, it boosted the growth that we saw in January. But overall, it's a negative effect, right? So we're seeing a lot of households, having precautionary savings rather than spending in the economy. Businesses are holding back on big investments until they have more clarity surrounding the trade dispute. So although there is some positives in January just from the exports, the overall impact just from the uncertainty has been pretty drastic.
And anytime you bring in the word protectionism, longer term, that can't be good for any type of economy, regardless of whether the fact the American president wants to have a more insulated or homegrown economic growth rate with these tariffs and trying to repatriate some production. Of course, that'll take years. But in the short term, that hurts pretty much everybody.
It hurts everybody for sure. There's been attempts at protectionist measures throughout history, and none of them have worked out ultimately. And that's what we think is going to happen here. We've already seen the European Union turning on the US now, and in Canada with the retaliatory measures that they put in place in March, just from the threat on March 4th, and then again to retaliate to the US tariffs on Canadian steel and aluminum products. There was another wave of retaliatory measures announced on March 12th. So, yeah, it's not a good situation for anyone, and we're hopeful that this doesn't last forever.
Does this further accelerate? We've heard this in the election campaign, and even prior to the campaign starting. This idea of easing or removing interprovincial trade barriers and really building the domestic economy. And that had been talked about for years. It had never happened. Does this actually force it into existence? And any removal of trade barriers, how quickly could that be implemented? How much resistance could you still get from certain pockets of the economy? And is that the least bit enough to offset the north-south trade balance?
There are a couple positives that could come from this whole trade dispute that we're seeing right now. And one of them is the removal of interprovincial trade barriers, which has been a long-standing issue in the Canadian economy. In terms of how quickly they can get removed, some things could happen very quickly. Some of it's around, for example, regulations on certifications. I think some trades, you have to be certified in certain provinces to work there. So removing some of those barriers or some of the rules around transportation and transportation of goods, that could happen relatively swiftly. But that being said, not directly overnight, right? So it would still be in a bit of a waiting period for that. And
you wonder also how many industries that have so far wanted those barriers in place. I think of maybe the wine industry, for example, Ontario versus British Columbia. There are various sectors that might not necessarily be open to the idea.
No, that's exactly right. In theory, they could get removed pretty quickly, but there's always, political issues there. So, we're kind of in a wait and see phase for that. But, the fact that the premiers want to prioritize it is at least a positive step towards removing these barriers.
Mm-hmm. Now, we saw, again, getting back to the initial statistics of the day, the January GDP numbers coming in pretty good, but short term or current, I think the talk has been wait until the February and March and subsequently April statistics for the real damage done from all of this. Are you expecting to see, for example, the unemployment rate going up or inflation statistics rising or anything? There's already been a little bit of an indication of that. Do we start to see price pressures materializing again?
Yeah, absolutely. In terms of the unemployment rate, we see a lot of businesses just holding off on hiring until there's some more clarity. So again, it's just the uncertainty that's going to keep hiring in check and maybe keep the unemployment rate flat or maybe a small increase. Without this whole dispute, we would have seen the unemployment rate actually fall this year. So it's hurting the job market. And in terms of inflation, yeah, exactly. The Canadian dollar's been pretty weak over the past few months. So that's one thing that's going to boost up inflation in February or in March rather, and that boosted in February as well. So just the threats. The advanced reading for February is that the economy was flat, and we'll probably see something similar in March. And then April, of course, is the really uncertain period. We're still waiting to see what happens next Wednesday.
Yeah. Well, over the past year, the discussion about the economy has been sort of a yes, but commentary. In as much as, yes, we've seen growth from an economic standpoint, but a lot of that was based on population growth, kind of masking some underlying weakness. So consider how the government did change the rules on immigration late in 2024. Does that start to factor into this as well?
Yeah, exactly. You hit the nail on the head. A lot of the growth seen in the Canadian economy over the past couple of years was actually due to the population growth. The per capita level of the Canadian economy has actually been falling, which is a pretty concerning trend. That being said, it did start to turn around in recent months. Interest rates, have been coming down since last June. So we did see per capita GDP increasing this year. Now, as federal immigration targets are cut beginning this year, that is going to hurt the overall economic growth for sure. There's no way around that. And it's pretty widespread, right? So it's going to hurt government revenues. It's going to hurt overall consumer spending. It's going to tighten the job market, which isn't a good situation for businesses either. So pretty drastic change in the policy of immigration starting this year.
Let's look worst case scenario and then hope for the best, I suppose. But if we see an escalation in this trade war and a subsequent slowdown in the economy, combined with rising inflation, if prices go up, well, then you've got this word that we haven't heard in quite some time, stagflation. It's not necessarily going to happen, but it's something that maybe we should be aware of. Can you explain specifically what stagflation is and how much of a concern do you think we should have about it?
Yeah, absolutely. So stagflation is essentially when the economy is contracting and we see really high levels of unemployment at the same time that we see really high levels of inflation. So normally when the economy is doing really well, there's a lot of additional spending and whatnot that actually boosts inflation. So it usually goes hand in hand with stronger economic growth. So stagflation is essentially the opposite. The economy is doing poorly, but inflation rises. And that's totally a possible situation here. If these tariffs go ahead, if they're really broad-based on all goods, the Canadian dollar would depreciate. The retaliatory tariffs that the Canadian government would put in would also increase import costs in addition to a weaker dollar. So we could see inflation really spike, but at the same time, the economy would come to a standstill because the impact of the trade, the tariffs there.
Now, Governor Tiff Macklem at the Bank of Canada hasn't said the word or anything of that nature. They basically have said, well, let's just kind of wait and see how this all plays out. But do you see this as being a true risk? And at the same time, if it were to happen, what does the central bank even do under that circumstance?
Yeah, well, we don't see it as a big risk, assuming the tariffs, if they were broad-based, only last a few months. We don't see inflation spiking that much. And that's due in part to just because the Canadian economy would be in a recession, and that would offset some of the added price pressures from the tariffs. In terms of the Bank of Canada, they're really kind of handcuffed in what they can do. In one sense, if they raise interest rates to curb inflation, that's also going to hurt the economy by reducing the amount that consumers and businesses can spend. But then on the other hand, if they reduce interest rates to stimulate the economy, that's just going to stoke inflation again. So the response from the Bank of Canada, it's going to be pretty limited, we think. And the support for the tariffs would come more through the fiscal response. So like governments pumping money into the economy to support consumers and businesses during this time.
And we've already heard a little bit of talk about that, but and really we saw that during the pandemic, of course, lots of government spending. Do they have the financial firepower to do what's necessary? And then at the same time, does that in and of itself bring inflation, move inflation higher? And that's, that was some of the commentary from the Bank of Canada that, they were fighting almost against the government when they were trying to cut interest rates or move on interest rate policy.
Yeah, well, it's a tricky situation, right? So when they just pump money into the economy, that's something that could stoke inflation as well. And the federal government, they have actually announced that all the money that they will be receiving from their retaliatory tariffs will actually be redistributed in the economy. So you're right in saying that we've already seen some announcements for support, including the actual, to add to that, the $2 billion for the auto sector that Prime Minister Carney announced the other day.
This coming week, we will have the jobs report for the month of March for both Canada and the U.S. Will March be the true test or early test, I suppose, of the effects of tariffs on the labor market?
Yeah, absolutely. We saw job growth was, jobs were pretty well flat in February. So we're thinking it'll probably be around the same for March, because there wasn't a full blown tariffs implemented. They got walked back shortly after they were put on. In early March, there won't be too much damage, but again, that uncertainty is going to keep some businesses on the sidelines when it comes to hiring. So we're thinking the employment numbers will come in roughly the same as they were in February.
Richard Forbes, thank you very much for joining us today.
Thank you very much for having me.
And that was Richard Forbes, Principal Economist at the Conference Board of Canada. You've been listening to In This Economy. My name is Mike Eppel. If you have any questions or story ideas, you can email me at mike.eppel@rci.rogers.com. My X handle is @Eppman, EPPMAN. Thanks for listening.